going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Now, my dividend portfolio, my M1 Finance dividend portfolio, right now, I've earned a total of $17,676.76. I started this dividend portfolio right here in July 4th, 2019, and I am all the way. And I reached at least 110,000 before. And I have a combination of high yield dividend stocks and dividend growth stocks. I also have high yielding ETFs. I'm going to surprise you with a high yielding ETF that I bought next week. But I'm going to include 3 high yield dividend stocks that I started loading up on. One of them is a brand new one. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these dividend stocks right now. First one I want to go over is GoLub Capital BDC. Yes, I went after another high yield business development company. Remember, with taxes, you don't really get a discount on them, okay, like a dividend discount if you buy it and report it as income. You can correct me if I'm wrong, but if I make $1,000 in GBDC, I have to report that as income for $1,000 with GBDC. So the dividend yield is 9.65%, a PE ratio of 7.99, average volume 817.75K, market cap is 2.77 billion US dollars. Year range is 1292 to 1772. Day range is 1615 to 1632. Previous close is 1611. Now, I'm not going to go really in depth with these with this business development company. I'll do a future review on them. But right now, I want to go over the revenue trends and dividend history. So when it comes to investing in business development companies, remember, 90% plus what they make have to go back to investors. So I myself, who's an income investor and like a hybrid of a dividend growth investor, I invest in both. I love the revenue trends. So annually in millions US dollars, 2015, 119, 2016, 127, 2017, 137, 2018, 152, 2019, 172, 2020, 298, 2021, 307, 2022, 387, 2023, 603. That is a huge increase in revenue. And usually with business development companies, the dividend growth is a little bit slower. But if the revenue's up, the dividend grows. So let's go over that with their dividend history. So I'm going to start in 2010 with the quarterly dividend, 24 cents to 31 cents. 2011, 32 cents, big roadblock. Okay, 32 cents, 32 cents, 32 cents. That's up to 2017, still 32 cents. 2018, it looks like maybe a little special dividend, 44 cents. Still stuck, 32 cents. Then in 2019, you get a quarterly dividend of 46 cents and then 33 cents. Pandemic hits in 2020. Dividend is stagnant at 29 cents. Then in 2021, it was 30 cents. 2022 is 30 cents. Then it jumped to 33 cents. 2023. It looks like maybe a little bit of a special dividend of 4 cents plus 37 cents. And then in December, 7 cents plus 37 cents. Then in 2024, 7 cents plus 39 cents. And then it looks like maybe a little bit of a special dividend of 6 cents and 39 cents. So they have been hiking their dividend. I'll just call it a primary. 29 cents in 2021, 2024, 39 cents. So yes, you will see a high payout ratio with a business development company. Remember, 90% plus of what they make go back to investors. Their number of dividend increases in the last 5 years is 6. Dividend growth in 5 years is 3.39%. So if you bought one share, you made $1.56 with a 9.68% dividend yield. Now, as an income investor, I absolutely love it. Long-term plan, hopefully use their dividends when I get to 400 or so shares. Use it to buy the dividend growth stocks, and the dividendo manifesto will be in full. It'll be fully functional, and the dividend firepower will kick in. Now let's jump to another high yielder that I've been buying. And yes, I've been buying Everyone's favorite sin stock, Altria, sitting at 45.51. Dividend yield is 8.61%, a PE ratio of 9.53, average volume 11.30 million. Market cap is 78.17 billion US dollars. The tier range is 3907 to 4660. Day range is 45.46 to 46. Previous close was 45.64. Long-term goal: Altria's dividends to buy the dividend growth stocks. That's what my long-term goal is with Altria. And so far, the one thing that concerns me, I'm going to still go over their revenue trends. I can't confirm that I'm going to be long in them, but there's a few things that I'm still a little concerned with Altria, and I'll go over that. I wouldn't be hesitant to sell them. Things don't go well. So I can't confirm if I'm long in them, to be honest with you. Let me show you the revenue trends and dividend history. So the one thing that is a little concerning about Altria, and I'm going to be honest with you, okay, the yield's getting higher, but the revenue has been kind of stagnant. This is annually in millions US dollars. 2015, 25,434, 2016, 25,744, 2017, 25,576, 2018, 25,384, 2019, 25,110, 2020, 26,153, 2021, 26,013, 2022, 25,096, 2023, 24,483. Now, the one thing that has them going is, the Mary Jane business is starting to get bigger. And, the legalization, this and that can be a big factor. They heavily invested in Mary Jane companies. They also went after vaping. Now, I don't agree with vaping. I don't agree with smoking. If I was dating somebody that smoked the Mary Jane or smoked cigarettes or vaped, that's a turnoff. That's a deal breaker for me. I wouldn't do it. I would not pursue someone. I do not like smoking. It is a pure sin stock. I will tell my patients in the hospital, and I'm a very strong advocate to tell people not to smoke. But again, I am an income investor. I respect people's wishes. They do what they want. I'm against smoking. I really am. And, it's a disgusting habit. Stinks. Don't get me wrong. I'll enjoy my cigar here and there, but smoking's not good. But people are not going to stop doing it. So it's a choice, and people want to do it. So be it. Let's jump to the dividend history. So I'm going to start in 2017. It's been 66 cents, 2018, 70 cents to 80 cents, 2019, 84 cents, 2020, 86 cents, 2021, 90 cents, 2022, 94 cents, 2023, 98 cents. So it's in 2024, it's sticking there at 98 cents. So according to Zacks, their payout ratio is 80%. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 4.07%. Will they crack the dollar mark? I don't know. If you bought one share, you made $3.92 with an 8.59% dividend yield. So could there be a dividend cut in the future? There could be a possibility. So you have to be aware of your risks when you invest in high yield dividend stocks. I've been emphasizing that. I'm aware of the risks, and I'll take the risks. And I use my income stocks to buy dividend growth stocks. That's a long-term strategy. I love both. I don't care. I love both. I love making a lot of money with Arbor Realty Trust. I love making a lot of money with One Main Financial. I like that revenue. And I fully believe, this is my philosophy, if you just completely focus on dividend growth, good luck, because you're going to need a lot of money, a lot of resources. Now, is it possible? Yes. But I'm going to be honest with you, income investing is very nice. I can use that income to I can do it to buy a lot of stuff. I have my passive income pretty much pay for my air conditioning, which is nice. I use some of my passive income to buy off student loans. What's wrong with making an extra $200+ quarterly? Nothing. What's wrong with using that quarterly dividend income to buy dividend growth stocks? Nothing. There's no problems with that. That's the way I see it. People have done very well income investing, retiring with income investing. So I like both. But again, at the same time, I love to get raises, consistent raises with dividend growth above 10%. Let's jump to the final dividend stock. Now, there's a few things that I like seeing. So, annually in millions US dollars, 2013, 23,878, 2014, 23,025, 2015, 20,000, a little bit down, 2016, 19,000, 2017, 26,000, 2018, 32,000, 2019, 33,000, 2020, 33,000, 2021, 35,000, 2022, 34,000, 2023, 30,000. So an increase in annually in millions US dollars by $10,000 since 2013. I'll take it. Again, I like income. I don't agree with smoking. I think it's terrible. It stinks. I don't like smelling like an ashtray. And believe me, I went on a date with a girl. She lied in her profile that on the dating app in 2019 that she smoked. I kissed her and I tasted an ashtray. That was terrible. I'm going to tell you, it's not attractive. It's a choice. People make a choice. I respect their decisions. Look, I work in healthcare. I'm pro-vaccine. People don't want to take the bug vaccine. It's their choice. I'm not offended by that. Their choice to do this. Their choice to smoke. That's fine. I'm against it. I will be anti-smoking. I will tell my patients in the hospital, don't smoke. It's terrible. I fully believe it. But again, I'm an income investor, so I want income. That's a choice. Now let's jump to the dividend history. I'm going to jump to 2018. It was 60 cents to 67 cents. 2019, 63 cents, and then 67 cents. 2020, 65 cents. Then back to 67 cents. 2021, 71 cents to 74 cents. And then 2022, 73 cents, 74 cents. 2023, a little bit of a 66 cents, and then 70 cents, and then 73 cents. So it's a little up and down. Reliability isn't there completely. Its dividend increases in the last 5 years is 13. Dividend growth in 5 years is 2.55%. So if you bought one share, you made $2.90 with a 9.44% dividend yield. So I want to think about this and reflect on this before I conclude everything and jump to my disclaimer. You have to be aware of the risks. Now, these are sin stocks that I went after, and I went after a business development company. You have to be aware that things can happen. Why I like having a balance with more stable dividend stocks versus these three. I like stability, but I like income. Okay, so I have a hybrid strategy, a very integrated hybrid strategy. And PPC Ian had a fantastic video on BTI, and it convinced me to buy BTI. Now, again, he's not giving financial advice. I'm not giving financial advice, but I really like his rationales. I'm going to include him in the comment section with his video on BTI. I had to really think, and thank you for the shout out, Ian, on X. You have to realize that you have to adapt to change. And as a dividend investor, income investor and dividend growth investor, you have to be calculated. You have to be wise with your decision, and you have to take risks. Income investors, we take risks. Okay, Zim resumed their dividend. Am I considering rebuying Zim? Maybe. Okay, some people like, what is that? Icon, his thing. I'm not a fan of it. Okay, I don't like the revenue trends. Zim is I'll probably do another video on Zim. Zim is a very unique company. that I really do. And I may buy shares in them again. But you have to be aware of the risk. Like IEP, ICANN, like I said, Enterprises revenue sucks. These guys, at least there's some consistency with the revenue. Huge increase with GBDC, which got me to buy them. But just be aware things can go bad, and you better have a good backup plan if things go bad. That's why I have a well-diversified portfolio and a lot of stocks. Probably way too many. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you on Monday. I rebought somebody that I'll take a risk on. I'll throw some play money in. Because I'm debt free, I'm student loan debt free. What am I going to do with that money? I'm going to take some risks. And you're going to find out Monday what I put money in. You guys take care and have a great Friday, and I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. It is best to seek financial advice from a financial advisor or tax advice from a tax advisor. Don't use my YouTube channel for any tax purposes either. Investing is a big risk. You can gain money, you can lose money. I cannot confirm I am long on all three of these dividend stocks, but I've been buying these dividend stocks. You have to be aware of the risks in investing in high income, high yielding dividend stocks, and you can lose your money and go to zero, possibly. Be aware of your risk, do your due diligence, and go find a financial advisor and get financial advice. Take care and have a great Friday.